Hey, happy Friday, everyone. Good afternoon. Futures Brizio here. 3:14 p.m. on Friday, December 13th. Hope everybody had a great week. And just going to jump in here, do a quick review from today, and we'll probably get through this pretty fast. Last couple of days I was making videos using money flow index and volume on a short time frame. So you can go back and look at that if you would like. Um, I just, like I said, guys, I make these videos because I think, people have different trading styles, different things they like to use. And so, I make that. But I've also said that, trading on short time frames is not something I do a lot of. I just don't feel the desire to be glued to the chart. So when you're trading on like a 5 minute time frame, I mean, you have to be like focused on that chart for, in the futures market for at least a couple hours a day, to look for entries so you don't miss them, because you have such small margins in terms of like missing an entry. And also even to, set a profit target for that trade too, because if you're on a short time frame, especially if you're trading against the higher time frame trend, you have to be able to get out of that trade sometimes pretty quick, 30 minutes, 60 minutes. Maybe it's an all-day trend if you're going in the direction of the main trend, or it's just a large correction or reversal day. But you have to watch it closely. And again, it's not something I prefer to do, but I do it once in a while, especially if I don't see any setups on the longer time frames. But anyways, with that said, I'm going to go back just a quick analysis here using higher time frame trends. But you can see I still have the money flow index on this chart, which is what I talked about yesterday. It's a 7-period MFI. And I do think while I don't think there's a lot of use for the volume indicator on these higher time frames, I don't really think it's useful once you get outside of the time frames in the minutes. Once you get into hours, I don't really see a lot of value. So I don't have that on here, but in terms of the MFI, I think it has some value, especially this shorter version of it, which I think is not too bad on the on futures. Okay, so let's just jump right in. So this is natural gas, and this was actually the only trade I took today. And wasn't a really super profitable trade, but it was profitable nonetheless. And basically, what we have here is the 4-hour trend going up here, and we had this pullback, price went up, and so I was basically trading the correction. Now this downside move started let's see, I have to go to a shorter time frame to see that. This downtrend move started at 1100 hours, which is that's like 6 o'clock this morning. Unfortunately, I wasn't on the screen that early, so I missed it. By the time I came to my charts, we were just kind of coming off this little corrective move right here, and that's where I jumped in. I said I'm going to play it down to this support area off the 4-hour chart, and that's it. Now, of course, there's no magic to this area, but obviously it's an area of focus. We'll see what happens, whether the price is going to just blow right through here next week and keep going lower, in which case, this will be our next area of interest down here. But for today, I was only interested in just trading it back to here. And you can see price just kind of stalled out and it's been stuck around this area, especially being Friday. So that was the trade. And, basically, yeah, I mean, that was really it. I kind of jumped in while it was moving. But that was the trade, and I was out of it, took my profit right at the support level, and that was it. Now, I did, like I said, I did want to just point out the MFI. Now, this is the hourly chart, and you can see the MFI would have gave you a couple of nice resumption to trade. So this is an uptrend going here. We had this big pullback. You see the MFI went down, down, down. We wait for it to get below this 20 area, which suggests oversold. Now, we did have 2 signals here to get us out of that zone. The first one happened on this little red. So you're like, well, you got 2 false signals here. Well, yeah, you did. But really, if you look at it, the first false signal came on this candle right here. Okay, would you have taken a long signal on based on that tiny little red candle? No. Well, I would hope you wouldn't. I know I wouldn't. And then the second one came on this bullish little doji candle right here. Okay, again, would I have taken a long on that? No, I would not have. So even though, yes, you got a false entry right here and right here, all you got to do, that's why I said you can't trade these blindly, but all you got to do is just look up and say, does it make sense to go long right here? No, it doesn't. And then we had this move. The price continued to fall. The indicator went even further into oversold. And then when it finally crossed back was right in here. Now at this point, now I'm interested because now we are painting bigger bullish candles. The momentum's clearly picking up. And remember, the MFI takes into account price and volume on its move. So if you dig down to a shorter time frame, maybe like even say a 5-minute, let's find that space on the 5-minute chart. It's back here somewhere. Here it is right here. So we were coming down, 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 down. Right here, as soon as we break structure on the 5-minute chart, here was the last little swing low on the 5-minute, went down, came up here, took out this area, pulled back. So you could have gone long anywhere in here, would have been an excellent trade. Okay? So that's what I'm saying, like the MFI did work. You just have to, use a little common sense about where the entry is. Okay? Now, if we look at the next entry, right here, we did not come down and actually get into oversold. Now, sometimes that's going to happen when you have strong price momentum. And in this case, you got a signal. It started moving back up on about this little blue candle right here. Now, maybe you took this, maybe you didn't. If you took it and put your stop loss under here, you got stopped out and it started going up, probably was looking pretty good, and then boom, it came back down. So if that happened, so be it. That's, it's not always going to work. But if you decided to enter, even though it didn't actually hit oversold, and then when it came back down here, it did hit oversold, and then we got this bearish engulfing candle. This is like a blow off low liquidity sweep, and came right back with a large bullish candle, almost the same size. And there was your entry right there. Okay. And then, of course, it went up and led to a new high. And then price came down again, tagged over here again. But again, if you look at this entry was on this tiny little doji candle right here. Clearly, again, if you looked at charts for any length of time, you would know that this whole move here is just a corrective move. Tiny little candles, doji candles, okay? And then, boom, price failed and went down again. Now, you probably could correct some of this by adjusting the length of the MFI. So if, like, we made this maybe into like a 10 period, okay, that actually does clean things up a little bit. So you do have that option. It actually took away one of the false entries here. It still gave you this one, but it still left this one intact, the valid entry, and it took away these two over here entirely. So you have to play around with the length of these things, and it could vary from one chart to the next. It just depends on the volatility of any given instrument. Okay. But I did want to point out that the MFI does have some usefulness on the higher time frames. And I think it's a better indicator than an RSI because it does take volume into account. And when you're trading futures, I think you do need to account for volume. It's not so useful in Forex, as I've mentioned, but in futures, I think it has some legitimacy. All right. So anyways, that was that trade today. Oil, is still essentially on the higher time frames. It's still moving inside of a range here. If you go out to a 8-hour or higher, you can really see this range we're still operating in. But on shorter time frames, we do have a trend here, right? We had a pullback here, we had another pullback here, and you can see here. Speaking of the MFI, this would not have given us a signal on this long or this long, because you can see in both cases the MFI only came down to about the middle of the range. So this was the real entry, was down here. And of course you could have held it all the way here. You never, if you had gotten in down here, we never had any break of structure to exit these trades. So this would have been fine. But if you had missed this one, you would not have been able to rely on the MFI to get you back into this. So you would have to just use either another indicator or your own price action if you're going to only use the higher time frame. But again, this is a 4-hour chart. So if we drill down to a shorter time frame, and let's just mark this area off, okay, even though it's the most recent price action. Now down here, you can see the entries much more clearly. Okay, now let's do the same thing. Let's change this just for a laugh to a 10 period. All right. And now, of course, here was the original entry here. And then let's look here. Here's our next entry. Okay. It's not great, but, you know, if you had gone long right here, it would have been okay depending on your stop loss. You can see they came down and swept the liquidity below this low. So again, this is what I was talking about. You can't put your stop too close. You would have missed out on a great trade just because you were, you know, trying to be cute and get a super tight stop loss. Because even if you had gotten in here, as long as you've been able to withstand this tiny little bit of drawdown, this is only an hourly chart, so this is not a big drawdown, then you would have had this all the way up. And then we had our next entry over here, and this one would have been good. It was right here, which led to the current high. Now you would have missed these little sub entries right here, right here, right here on this time frame. But again, you could have, and this one right here. But again, you could have gone to a shorter time frame still and maybe picked up those. Okay. Now remember, the shorter the time, let me just take the volume off here just not to confuse the chart. Now remember, the shorter you go, the more chance of false entries. But on the way up here, you know, you would have been able to maybe catch some of these other sub entries here that you wouldn't have caught on the hourly chart. Okay. So, you know, there is an opportunity to drill down a little bit if you know that you're, you know, entering in the direction of the trend. If we mark these off, we just mark these off. That one we got. How about this one? We go to the 15 again. Here's those entries on the 15 again. Not quite down to the oversold line. So on this one, but you know, these two here are pretty good. This one here pretty good. So again, you could have used the MFI to help time these entries on an even shorter time frame. Maybe on a 10-minute. Now we pick them all up. Okay. But again, remember, the shorter you go down, you're going to get, look at all these false signals. So I don't want to just cherry pick. This is the issue when you go to too short of a time frame. Now you start picking up potential false entries like this one and this one. All right. So in my opinion, the better thing to do is to stay out on a little bit longer time frame, 15-minute, 30-minute, 1 hour, and just catch the real good ones. And if you miss one of the sub ones in between, that's just the way it goes, right? You can't have FOMO. You're not going to catch every single one. Because if you go down to a really short time frame, then you do run the risk of, you know, you're going to get more entry signals, but it doesn't mean they're all good. In fact, a lot of them probably won't be. Okay? So that was oil. Then we move on to gold really quick. You know, we had gold has been back trending down a little bit here the last couple of days. We had structure break back here on the hourly chart, and we've been trending down. And so there is a support area down here. So I suspect gold is going to wander down here, probably get back into this area, and then we'll see what it does. Do we break through and keep going lower? Or does the market find buyers down here and we turn and go back higher? So this should be telltale pretty early next week. And next week will really be the last probably full trading week of the year because of Christmas and New Year's. But next week is a full week. So, but that will probably be the last real good trading week for December. But I do expect to see this kind of drift lower into this support zone. And then the question will be, do we, you know, come down and take out these lows here and keep traveling lower? Or again, was the market going to find some support in here and we continue back to the upside? So, but in the short term here, I do expect this to obviously continue down. And same thing with the MFI. There are signals in here on the 4-hour, 1 hour chart using the MFI, and you can go back and back test that. Again, I recommend a setting of somewhere between 7 and 14 periods on the MFI, depending how sensitive you want to be and how volatile the asset is. I think 10 is a good number on these higher time frames. As you go down lower, you can adjust it a little bit, but 7 to 10 is a good range. Makes it a little bit more sensitive, but still should filter out a lot of the bad signals. And then finally on the NQ, again, 4-hour chart here. We did have this pullback that led to this high. You can see it a little bit on a shorter time. Here was the pullback, led up to this high. We did come down today, filled in. There was a little gap on the chart here. The price came down, filled this in, and here late in the session does appear to be going higher. Again, very low volatility this time of day on a Friday, so obviously I'm not trading this, but that was an opportunity. In the MFI, on the 1-hour chart here, it would have given you a signal right here, and this would have been good. And there was one back here too. This one you would have had to have withstand this little pullback. So again, depending where you put your stop, because here was the entry, and you can see they swept the liquidity with this little wick right here. So as long as you didn't have your stop right up against here, put it a few points away, give this a little breathing room, you wouldn't have gotten pegged right here. This was probably a news candle with this gap, and then the price went up higher. So and then we had this big bearish candle on the hourly chart today, came down, filled this gap in, and then started moving higher, kind of chopped around a couple hours and then started going higher. But again, the MFI would have helped you with some timing on this. So I am a fan of the MFI but again, you got to use it in context of what makes sense on the chart, and don't just blindly trade every signal you see on here. Trade in the direction of the trend. If you're a swing trader, day trader, swing trader, kind of that 1 to 4 hour trend. Wait for the pullbacks. The MFI will give you those pullbacks. And then just, look at the price action. Does that signal to re-enter make sense? If it's an uptrend, are you getting a signal on a tiny, tiny little candle with no volume, or especially a bearish candle, or a candle that's a doji or just very low volume, or does it make sense where it's an engulfing candle, or it's a bigger candle than the ones preceding it, where it's showing you that there's volume behind it? And another thing is to go down to the 5-minute time frame. If you're trading, if you're looking for entries on the 1 hour, go down to the 5-minute on that signal, and is there a market structure break on the 5-minute? Is there a break of structure to the upside that broke the downtrend on the 5-minute? And that is another good confirming signal that your higher time frame signal is valid. Okay, so I did want to kind of paint the picture on this and use the MFI for day and swing trading, and not just for 5-minute scalping. For those of you that can't sit there and don't want to sit there in front of and stare at charts for 2 to 3 hours, diligently every day, because of the, what you have to do to scalp on a 5-minute chart. You really have to be tuned into that chart the whole time. So, all right. So, I did want to point that out. So I'm going to leave it there, guys. I hope you have a great weekend. As always, make sure you smash the like button, subscribe to the channel, and any questions or comments, leave them down below. Hope you guys have a great weekend. We'll be back next week, and I'll talk to everybody soon. Okay? Thanks. Take care.